Good afternoon, everybody, and welcome to this session on the importance of cash management during the crisis. So the impact of the pandemic. I'm David Shinkins. I'm Global Head of Cash Management Sales for Barclays Corporate Bank, and pleased to be facilitating the next session for today. But first, before we jump into the session, let me ask all of the fellow panelists to introduce themselves. So first of all, Hailey, can I come across to you, please?
Sure. Hailey Laverty, I'm the Group Treasurer at IHG Hotels and Resorts. I've been here since around middle of 2016, and I think most of you are probably familiar with some of our brands, but they include hotel brands such as Crowne Plaza, Holiday Inn, Holiday Inn Express. And I think what's relevant to the conversation today is just for those of you that don't understand in terms of the business model, it is actually mainly a franchise business. Probably about 70% of our hotels are franchised and only 1% owned. There's a little bit of background.
Great, fantastic. Thank you very much. James, I'll come across to yourself.
Yeah, thank you, David. Yes, good afternoon, everybody. My name is James Marshall, so I'm the Head of Treasury at Virgin Media. So, UK media company, broadband, home phones, television, and Virgin Mobile as well. And we also have Virgin Media Ireland as well, just under our stable. We're all owned by, our business is owned by Laverty Global, international player in the cable space. And, this last year has been, one of constant challenges really and opportunities for us. So, so hopefully good discussion this afternoon. But thank you, David.
Great, fantastic. Nicolas, to yourself.
Yeah, thank you, David. So good afternoon, everyone. My name is Nicolas Christiaen, and I'm the CEO and the co-founder of Cashforce. And with Cashforce, we're saving time and cash for corporates worldwide by providing working capital and cash forecasting insights through our Cashforce SaaS platform. So we work with corporate clients such as Pearson, Dawn Foods to improve their daily liquidity, but as well as their longer-term cash flow forecasting, which obviously has been a subject with an increased interest over the last 12 months.
Fantastic, great. Thank you all ever so much. And I think first of all, as we've all said in that introduction, clearly 2020, clearly definitely a year like no other. I think is the best way to describe 20. And of course, with positive outlook and signs for 21. Now, of course, we've got lots of different clients and colleagues on this call from around the world in different businesses and industries. And I think one of the interesting things for me is clearly how there have been particular opportunities and challenges that have been presented by the COVID crisis. In particular, the themes we're going to cover on today are predominantly around what has that impact been, how have the markets responded, why has it been important to establish that real clear connectivity, particularly from a bank and treasurer relationship, but also how have we seen just really the market dynamic change. So let me jump into the first question, if that's okay for the audience. So the first question we're going to come to, and James, I'll come to you first of all, if that's okay on this one. So given the COVID-19 pandemic, what has been the key challenge or challenges that managing through a crisis has presented to you and your teams?
Yeah, no, thank you. No, good question. You've got to sort of take myself back to March 22nd, whenever it was of last year. Interestingly enough, that on the day when this was all announced, the UK is going to go into lockdown, we had a sort of quick management call in the evening, and just running through the most important things for each area. And kind of I must admit the education team at the ACT will be pleased, because my slide was based on the old acronym of SLY, of SLY. So, security was number one. That I was most concerned with. People are going to be, offshore teams are going to, have difficulty working. We've got people moving from a secure office environment to working from home. We've got banking systems, lots of electronic systems to use, and the business mustn't stop. It's a fundamental thing that mustn't stop. So kind of maintaining the security aspect of everything was kind of key. The second bit too, the visibility bit, Nicolas's side of cash forecasting, still ever so important. We're a highly leveraged industry. Lots of big payments to make, be they interest bills, VAT bills, you name it. But just to get to keep a real good grasp of all of that, and just to maintain our visibility of systems that, to be fair, we were actually expecting some of them to struggle. Didn't quite plan out like that, because I guess everybody was concerned that they didn't want their systems to be the ones that was going to struggle. So it was just very important for us that, my just message to the team was, look, just if we can just concentrate on those two things, And actually, you then wonder, well, what about the why? And actually, with the why, well, we kind of delegate that to Liberty as well. But that's kind of covered for us through the liquidity reporting that we do. So those are the two things that we're just most focused on from the off. So I think that kind of my Treasury background, ACT education and stuff like that certainly kind of helped really on just sort of setting a platform for us to work to.
Great, fantastic, James. Thank you. And then Hailey, from your perspective, obviously very different industry, but be interested in your perspective of the last 12 months.
Sure. So I think initially a little bit about what James was talking about, the thinking about the business continuity piece, the working from home. We had already started to have some internal discussions in the weeks leading up to the eventual announcement to start working from home full time. So we had started to put some things in action. We had been through and done a sort of a risk assessment across that business continuity plan. And therefore, when actually we did have to go work from home, we were relatively confident in most of our processes and people, and the tech that people would have access to. We checked it worked. We'd already been sort of trialing that in the lead up to the official announcement as well. And then it kind of turned to, thinking about what it meant operationally from a Treasury perspective. So in terms of funding some of our subsidiaries, which actually historically normally didn't need a lot of funding on a regular basis. So we had to start thinking at a very, very individual country by country level. Did we know, could we anticipate what the cash flow impact might be of the crisis? Because obviously we knew as a hotel company that we were going to have a significant impact in one way. So we had to do a lot more granular work on some of those countries than what we needed to do previously. Previous to that, we had already been looking at China because we've got a large Chinese business. And initially we thought obviously the biggest impact would be in China. So we had started working on China. Then obviously the focus shifted to a lot of other local subsidiaries. And then obviously from a group point of view, we needed to start thinking about it at a much higher level in terms of practical levels, measures that we'd start to need to take from a funding perspective. And that involved kind of starting to actually gather a lot more information than we had done previously as well, granular around cash flow forecasting, and then building that up and trying to sort of do a high level risk assessment on the gross cash flows within the group.
Great, fantastic, thank you. And obviously, clearly then, Nicolas, I'd be interested in your view. Actually, clearly different size and scale of organisation, a very different type of organisation as well. But your perspective on how actually the pandemic has been for you, but also, I'd say challenge, but also any opportunity you saw coming out of that.
Yeah, I think as everyone sort of saying on this call, when the COVID crisis basically hit, it was not sudden in the sense that we already were preparing a couple of weeks that something could happen. But of course, when basically the announcements came to work from home, it does come sudden. Happy to say that in less than 12 hours, actually, we were already pretty digital as an organization, as a software provider. So in less than 12 hours, we actually transformed in getting everyone to work from home. VPNs and all the typical security measures taken into account. And it's strange even to think that in a couple of weeks' time, we're having sort of to relive this unfaithful anniversary. But let's say when it comes to actually the business itself, we were also, and we are still, let's say, creating our new platform, Cashforce Next Gen. Now, if you create something new, there's creativity, there's innovation that actually needs to take place. And doing that exactly, separated from each other, not being in the same room, humans not being able to interact, that of course created some specific challenges. So virtual whiteboarding and virtual creativity sessions coming into that. And as you said, of course, the scale of Cashforce, it's a rapid growth organization. So you basically continuously hire people, you continuously grow in terms of size, but also other parts. So you need to strengthen your communication lines and really inside and outside of the different teams and sustaining the culture at the same time. So I think these were kind of the real challenges, so to speak, for the last 12 months. But at the same time, I guess when COVID really sort of was struck, we also got more and more phone calls from corporates around that wanted to get really more, more grip on cash. And as being said actually by James and Hailey, those questions were of the type that they wanted to have more granularity, more insight. They wanted to have faster answers to more frequent questions that were coming up around cash. So we just literally had more interest raised into this topic, and I guess also more, I would say, the topic itself got deepened a little bit as well for a lot of corporates when being faced with the pandemic. So yeah, so that posed, of course, a lot of opportunities as well around the horizon.
Great, fantastic, thank you. And Hailey, you started to touch on this in your opening point earlier on, but obviously given your results announcement this morning, so how have you seen broadly also the markets respond to funding throughout the crisis? You talked very much about the Treasury operation, how you sort of pivoted towards the work from home model, but how have you seen the markets respond to funding, and how critical has this been for you to basically navigate through what must have been quite uncertain times?
Yeah, obviously it's fair to say that if we go back just under a year, we were looking at our funding going forwards and trying to stress test that, trying to run scenarios against it. And just like anyone else, we haven't been through this before. So whilst we've stress tested for a repeat of the financial crisis, and we've had an understanding of how our hotel owners would act in that scenario, we didn't have a global pandemic type scenario sort of already built into the models. So when we looked at it from a funding perspective, we obviously started to work out what we needed to do and whether or not that was kind of some of the first actions that we took around our bank facilities. We then accessed the UK government CCFF scheme, and all of that was being done obviously against this backdrop of quite a lot of uncertainty. And we just started to take the actions that we could take during that period. And then for us, it's fair to say, obviously, we couldn't think about the bond markets. Initially, they would have been closed to our sector. And then as the summer progressed, and the bond markets kind of reopened, and we went back to the bond markets in October. So I think it was an interesting journey kind of throughout that period, and it was interesting to see how the markets reacted and that kind of initial closure. But actually they opened up even to our kind of wider sector, and some of our peers in the US did some funding in sort of late May, June time, actually. So which you'd actually sort of looking back, you think, that's actually feels quite soon at that stage of the crisis. So
yeah, fantastic, thank you. Yes, and so I think an interesting journey over the 12 months, but actually probably some surprises there, which is in a good place. So, so James, actually come across to yourself actually. So, how did you find exactly the same question? So, how do you find the funding being so critical, and also how did you navigate that? Particularly, be interested in your perspective on how the banks also helped you to respond as well.
Yeah, no, certainly. Yeah, thank you. It's interesting, really, because back in March of last year, as we were sort of starting to, to work this, we certainly had a pipe of deals looking to be done this year. And to be fair to, the way that we work is that our parent company, Liberty Global, actually sort of manages funding on behalf of Virgin Media and other, subsidiary companies of Liberty. But however, across last year, I mean, all aspects of our debt that we needed to, refinance or to, to move on has all been dealt with, be it, bond debt, or some of our receivables programs, new securitization issue of last year. But then, most importantly, really for us in our sector too, is that that the announcement, it's not closed yet, of course, but the announcement of a joint venture yet to be finalized with O2 at some point. So and that was done on the backdrop of this, which is sort of I mean, that was, I must admit, when the call came in that was certain to be worked upon this year, it's like, really? Gosh, wow, that's yeah. But anyway, it's one of those things you sort of think, God, when's a good time to do that? But anyway, that was just another aspect of last year that just had to try and cope with, really.
Yeah, no, exactly. I think, and then Nicolas, I'm going to come across you for a slightly different question. So if you think about given the backdrop that James and Hailey mentioned there, so why is it, and how has it become even more critical to have clear visibility of cash, and also a key learning that you've clearly, as as your organisation, has helped other businesses get a better visibility of cash throughout the crisis? I assume the answer is it's going to be clearly important, but I'll leave you to come up with the answer.
Yeah, I think David, and to your point, yes, the answer is simply it became more important. but it also became more apparent that it might be in the future as well, just as important to keep a good grip on cash for potential future unknowns. Because I think the COVID-19 crisis sort of introduced an unknown risk and an unknown risk for the future into the system. And obviously at that particular point in time, there were more questions being asked by different stakeholders that require faster answers. And through that, basically, a lot of more questions internally in the organization have been asked. So we've seen cash war rooms being set up. And these war rooms, of course, are just designed for, getting quick answers to these questions. But suddenly, decision makers are faced with a dramatic increase of decisions to be taken, and also more real-time data actually that need to be accessible to answer these questions. So it has really triggered also an accelerated digitization. So not only through real-time, but we also feel machine learning and AI, because suddenly there's more data needs to be analyzed, more trends need to be captured. So machine learning then suddenly pops around the window as well. And when we think about the answers, these are not only one-dimensional answers, but also scenario-driven answers. So what I mean with that is that when questions come up like, okay, how much funding do we need? It's not just one figure. It's a series of different figures depending on several scenarios and assumptions. And then, on the backdrop of what James and Hailey said on the funding, of course, funding is accompanied with due diligence, again, with different scenarios, different assumptions. So again, I guess the complexity of the whole exercise increases. And this, of course, let's say, has just driven more and more interest to the topic of cash and cash planning. And when we think a bit about sort of the key learnings behind this, because in the last 12 months, we have seen so many questions popping up to us, but of course, a couple of challenges as well that sort of suddenly came to the surface. I remember being in different webinars as well with ACT, and the topic being data quality, and how does that impact, let's say, cash flow forecasting journeys, and it really heavily impacts the cash flow forecasting journey, because a lot of corporates don't feel 100% ready to start. So it's a bit like a chicken and egg story. No corporate has their perfect data to actually start forecasting, but how do you then start, and when is the data actually clean enough to start? So for us as Cashforce, we've been really focusing lately on workflows, getting really in a transparent way the data together, just simply the data together, as well as on trying to come up with processes, how to clean the data, or getting insights into how to clean the data, and to lower the barrier effectively for entry. Because that's sort of the second learning that derives from it. When people are confronted with, we need to access data from all these different systems, they know that it will entail IT work and IT resources. And that, I think, is another key resource. These resources are quite key, but they need to be used efficiently. Things like these APIs, things like connectivity to ERP systems, etc., becomes really, really important, really to lower the barrier and to be, there with your fast answer to the ever faster question.
Great, thank you. And James, I might sort of turn to you now, actually. So given obviously the Laverty as the parent, clearly, like you said, Virgin Media is the sub in that case. So how is, I guess clear visibility of cash is important, clearly, to any treasurer, but particularly given your business model and how you operate, why more so, and how do the points that Nicolas just talked about resonate with you?
Yeah, no, absolutely. No, so I suppose just, our business model is such that we operate in the UK, but, at the start of pandemic had a, offshoring of certain portion of financial services and things like that, for example. And, and a lot of that had to come back, because the ability to work from home is not quite the same. So, some of the services that we used to have, run for us, bank reconciliation, processing and collection files, all had to come back onshore. Now, just one thing I would just say is that, when you sort of think about sort of working in the office, it's very easy to put into, not easy, sorry, but when you're putting a forecast together, you can pop around and talk to management accounts and pop and talk to payroll and, all of that. So you kind of forget, all the sort of the soft points that go into it. Now, one of the things that, we try to maintain that with calls and maintain that with, interaction that we're trying to force on people that sort of, it's just a little bit soft still. But then, however, the reality is that we're all, we're very Excel dependent, I must say, to be honest with you, and across our business and our industry, I think. And I must say that, cash forecasting, putting together statements, making better use of some technology, and, I think is something that we're going to be doing a little bit more, but rigorously in the future, to be honest. I think that, that's a bit more future proof than the way that we've got of working. And if I just go back to my security point to start with, then, because, once you go down that route, you've got people that can be trained on this system, that you need less granular knowledge about individual things to get a better view of cash. Now, very practical points that we do as well. I mean, we've kind of maintained this, but we have a first call in the morning, every morning through lockdown, nearly for a year now, has been our morning cash call. And it doesn't take very long, but this is literally everybody who's important to our cycle is just on this call for 10-15 minutes. And that's proved most useful, just to increase our degree of visibility and those unknowns that might be coming down the tracks, and just to be very open with people. Look, you just tell us, if something's surprising you, you've got to tell us. I mean, that's the thing. Look, we can take action and try and come up with a reason and then avoid this in future, but we just need good, honest, open dialogue with people as well.
Fantastic, thank you. So I think that point there, reference to technology, clearly important, so for future proofing. Hailey, how have you seen that from your perspective? So be interested in understanding a little bit around operationally how you managed through the crisis. Have you adopted similar approaches to James, or would you say you're already technology future proofed? Pretty interesting question.
Actually, we were just starting a journey to sort of systematize our cash flow forecasting just before the crisis happened. So we were very spreadsheet dependent previously. The sort of as far as we'd got, I suppose, at the beginning of the crisis was we'd standardized the spreadsheets. So at least each country and region was using a similar format, so that once we came to systematize it, we had a slightly easier job. And actually, at the time, that was great that we'd already done that, because when we actually needed to go get a lot of data right at the beginning, at least as we were getting that information out of those spreadsheets, we had a lot of it in a similar format, and we could start to aggregate it quite quickly. And then I guess because of the crisis, a lot of our IT projects across the group, you can imagine there was a big focus on capital expenditure, and some projects obviously got stopped or delayed because we didn't know how it was going to sort of pan out. But actually the Treasury project got the green light to continue, because actually it demonstrated exactly why we needed to do these projects that we'd already started. So that was encouraging, and we've continued to work on that project over the last year. And it'll still take another few months. It's a payments platform as well as a TMS. So that'll take another few months to sort of come out. But going through that process and understanding all of the detailed cash flows was, like I said, sort of touched on earlier, very important to us, funding our subsidiaries, making sure we understood what we needed to do. And we actually took a decision quite early on to kind of pre-fund quite a few subsidiaries for a few months, a lot of the smaller ones, so that we didn't have to kind of focus on them on a day-to-day basis operationally, and we could focus on some of the larger issues that we were dealing with.
Fantastic. I always think one interesting question always is, has COVID accelerated technology investment and actually leapfrogged? Interesting, James. We were talking about this before we started earlier on. I'd be interested in your view on that, James. So do you think the crisis actually accelerated investment? Do you think, and leapfrogged?
Well, it's interesting. I mean, because certainly in our space, I mean, just to bring it back to Virgin, just a tad, if I may, is that I suppose the technology that we offer through fibre, I mean, that's super important to people with their ability to work remotely and to work from home. So, I must admit, in our case, then, an awful lot of laptops were distributed to call center staff and things like that, within the first 48 hours of this. And, so, that's proved to be, a highly workable model. There's no doubt, I think, that, working practices are not going to be the same at all, I think.
Yep, no, exactly. And I guess the next question sort of come on to is, so if you think about, given that sort of backdrop, we've talked very much now about, challenges, opportunities in business models. We've talked about access to funding throughout the last 12 to 18 months, clear visibility of cash, Nicolas, are clearly very important. Always it has been, just probably became more pertinent in the last 12 months. But the next question I then got is, when you think therefore then about your treasurer banker relationships, and yes, we've talked very much about the technology and how we change the business models, but how important were those treasury banker relationships, and how did they? One would hope that they're initially strong, but how did they develop through the crisis? And have there been any pleasant surprises throughout that, or hopefully no shocks? But maybe Hailey, I'll come back to you as a first question, if that's okay.
Sure. Well, I think right at the start of the crisis, obviously, all of our banks were interested to try and understand the impact and whether or not that was on the more operational side, and whether we needed any additional support anywhere, but also so that they could understand any potential cash flow impacts, or for example, we did go through that process on the business continuity planning around, have we got access to every single online banking platform? Are we envisaging any issues? Does that mean we could end up going overdrawn somewhere or not? And were we able to make sure we found solutions to most of those? And I think in the main, that actually all worked quite well in the end, but it was useful to have some of those conversations with our bankers, just to sort of set the scene and in terms of where we were practically. And then I guess from a wider perspective throughout the crisis, we've had to negotiate covenant waivers and amendments with our bank group throughout the crisis. And I'm glad to say they've obviously been very supportive through that. And, we've spent a lot of time together actually in terms of, discussing the business, and obviously discussing the business model and thinking about what it looks like going forwards. So yeah, absolutely, it's been a good result from that perspective.
Yeah, great. And James, I'll come back to you before I come on, Nicolas. A slightly different question for you in a moment. But James, your perspective, and also given what's going on in the market at the moment, or potentially going on in the market.
Well, seeing everybody at home has made a difference. I thought all of the bankers that looked after us lived in palaces, and I've realised that they actually live just in houses like me. So that's been an eye-opening thing. I must say that it's just, again, it's one of those things that you feel privileged to have actually, maintained a decent dialogue with the people that support you operationally, because then you kind of go into this and you're not finding your feet with people that you don't know terribly well. That's kind of, helpful. The ability to then sort of talk freely about, operational things that you just need a bit more support on, discussions that we would have had about, we're offshoring a whole load of people. Sorry, we're onshoring a whole load of people. So we need smart cards and pins, and quickly, how can we do that, and getting, solutions to that helpful. I've got to think that, that hopefully the advent of this, and with DocuSign, is that the requirement to sign documents in ink is surely going to be as consigned to the bin now. Hopefully, David. That's.
I hope so, like you too, I'm sure. But I'm sure we're still on a bit of a journey with DocuSign. DocuSign's excellent capability, but I agree with you. I think the technology has definitely made us think differently, and I think it's also helped us, very much as banks, to challenge our own legal and compliance teams. So I agree with you on that point. But Nicolas, do you think back to the points you just heard there from Hailey and James? If you think about their broader relationships, have you seen your relationships actually strengthen with your own clients? I guess less about the banker client relationship, but actually, have you seen more opportunities be generated from your clients as a result of the pandemic?
Yeah, I think so. Absolutely. I think when this pandemic started at the very beginning, our support desk suddenly indeed got a little bit more questions than normally. We basically proactively reached out to clients as well from the Cashforce side, so to really see how we could help our clients working more active with the software. And there were actually a couple of projects, because I think Hailey mentioned that throughout. There were a couple of projects that were sort of underway. We were implementing it at certain clients, and suddenly it became clear that they actually wanted to already go live, like already 3 months before it was actually meant to be, but they wanted to really already start using the product, and basically get our help a little bit in door to say, okay, how can we actually efficiently do this with maybe a little bit less information than we hope for, but we just need to, get going on this one. And we also got a couple of, I would say, clients where different IT projects were actually, stopped and put on hold, except for this particular project. So all in all, I think the relationship, the dialogue strengthened throughout the crisis. And I think because we were building this Cashforce Next Gen, we were also setting up, let's say, a group of, call it, very active cash forecasting call it role models throughout the industry to get really their opinion and feedback. And so that for us was quite key. So we could identify, of course, that scenario building capabilities were, of course, key to further strengthen within our product. So I would say yes, absolutely, and we try to really leverage on that sort of increased relationship.
Yeah, fantastic, great, thank you. I'm conscious because we're about to be moving into questions in just a moment, but before we jump there, maybe one last piece of advice that we can all give to the audience. So maybe Hailey, I come to you first of all. If there's anything you can leave the audience with for today, what would it be?
Yeah, I think always make sure that you do understand that granularity underneath your cash flow forecaster, and you know how to get it quickly. You never know when you're going to need it and when it will be useful.
Fantastic, great, thank you. And James, yourself?
Yeah, well, I've got to say first, an outstanding broadband connection certainly helps when you're trying to pull all these complicated models together from home. But I would just echo that. I mean, that sort of fundamental understanding of, of your cash cycles. We focus an awful lot on our forecasting on working capital cycles too, not just direct cash, but working cap cycles as well. And actually sort of getting under the skin of those is something as well that we put a lot of effort in. So trying to do both is what we've tried to do through this.
Fantastic, thank you. And Nicolas, your perspective, just to finish off.
Yeah, absolutely. I think I would like to echo the same and maybe add a little smart thing here is that, let's say, when we think about new technology, we need to think about lowering the barrier, so that we need to seek internally to the right people that will get us going, started with a POC type proof of concept, in order to get new technology in the door and test it so it can be rolled out without huge investments up front.
Fantastic, thank you very much. So I think we're now going to move across to the Q&A at this point. And I'm just waiting for our operator to bring through the Q&A onto the screen. But while we're waiting for that, I can probably pose some questions myself actually while we're waiting for the tech to come on side. So maybe James, I'll come back to yourself first of all. If you think about clearly we talked an awful lot about technology there. So if you think on your technology roadmap, have you been thinking about the use of API connectivity back to the point of real time, and how important is that for you from your banks when you're talking about that sort of digital roadmap and journey that they're going on?
Yeah, certainly. I mean, especially with us, our billing is done quite differently for across the consumer business and also the mobile business. But certainly that this is an area that that we can that we need to include upon, especially on the mobile side of things. So as we look into to roll out changes to the billings platforms that we've got, actually sort of adopting more of this technology is going to be important in the next step, really.
Yeah, fantastic. Thank you. And I guess, Nicolas, when you think about the investment, you're creating your own underlying platform, from a technology standpoint, clearly technology is key, no question at all. But how do you find that sort of narrative and/or dialogue with your own clients when they're considering their longer term sort of SR, their sort of strategic investment plans? So how do you sort of have that type of dialogue when you're thinking about particularly about integration, I guess?
Yeah, I think integration, I would say interactivity with different other platforms is quite key. And I think sort of the typical discussion of best of breed versus the all-in-one then typically comes up. Now, I think everyone is used to, let's say, a mobile phone where you have lots of different apps. And I think if you look to the corporate IT landscape today, it's typically like that. It's a lot of apps and a lot of applications, and they need to talk to one another. The data actually needs to be interchanged. So for us, this dialogue has very much been moved towards, okay, how do we integrate data from this platform in order to feed the cash flow forecasting model? So for us, doing that in an easy way is absolutely key. And a lot of different, call it technological enablers have, of course, been created in the last couple of years to actively move forward with that.
Yeah, and maybe Hailey, actually just one question linking back to technology, as you sort of talked about your technology roadmap earlier on. I guess how long did it really take you to get that sort of real sign off, I guess, from the broader organisation on the new TMS going in? Were there any particular challenges you faced in getting the sort of sign off around SI and investment?
Sure. I mean, I guess the whole journey probably was about a year. from our kind of initial review that we did. So we did an initial piece of work looking at our processes across all of Treasury and cash management. And that obviously started to build a picture of where we had gaps and where we knew we needed to make improvements. So it probably was about a year in total from the start of that project effectively to the completion of it, which then also involved then going out and doing the RFP and choosing the providers. So yeah, we had to build a business case. We had to make sure, obviously, it kind of made sense and it was going to deliver value for the group, both on a from a monetary perspective, but also, from a controls and risk and process perspective as well.
Yep, fantastic. No, great, thank you. And actually, I've got some of the questions sort of coming up now onto the screen, which is great news. So the first one I'll start with, and maybe this is a question probably to James and Hailey first of all. So for large, well-capitalised companies, will you become more choosy over the banks that you use based on how flexible and cooperative the banks have been? Interesting question. I think they're giving you both had very positive experiences from what you said earlier, but maybe James, if I come to you first, or maybe as a broader treasurer's perspective, that'd be helpful.
Yeah, no, I know it's a good point. I mean, just one thing I would just say. I mean, I suppose that all the banks that support us, they're always going to have prime focus, but at the same time, a lot of things operationally. I mean, maybe this is where there's a bit of a disconnect coming. Really, is this that that what you might do operationally, just with some of the collection methods that you may well have. There's no doubt that that's changing. Some of the the abilities to collect through some of the new card technology and different methods, and even new currencies. We talk about Bitcoin later on, maybe, but that's but you see what I mean is there's going to be an opportunity for for definitely for more fintechs kind of in our space. I think large corporates such as Virgin are possibly going to be supported by more companies and more banks, and be they for specialists in securitization, specialists in factoring, specialists in operational banking, and then specialists in lending. I think it's going to be a broader church possibly.
Yeah. And then Hailey, I guess your perspective. So have you seen the banking group change, or do you have a particular view on that question? Because it's quite an interesting point of view coming out.
Sure. We haven't had any change in our bank group over the last year or so through the crisis, and all of our bank group have been really supportive. I think in terms of the way the question is phrased, I suppose it's a bank and corporate relationship is a two-way relationship, right? And it has to fit in both directions. So I think going forwards, that is what will become, if maybe the crisis has highlighted issues on either side, I suppose, that could have been apparent during the crisis. Different banks are making different decisions, not necessarily on a corporate by corporate basis, but, thinking about markets and geographies that they are doing business with and the types of companies they're dealing with as well. So there may be some change going forwards, but I think in a large number of cases that'll be a two-way decision, not just on the corporate side.
Yeah, great, thank you. And maybe there's a question possibly I'll probably ask myself here in a moment, which is probably the last one. So companies with weaker credit, will they find it harder to get funding, or more expensive, or both? And what advice do you have for corporates? Well, I think clearly, based on market demand, clearly we've seen the government schemes have been there really to support broader funding in the market. So particularly for organisations that may have been slightly more challenged as we've gone through the crisis. Now, what I would say is, can I give a view on price, or will it become more expensive, or will they find it harder? Of course, that's going to be based on the individual sector, the segment they operate in, and the markets they operate in particularly the banking group. Naturally, how the markets respond. It's all really about, I think, probably to Hailey, your first point, it's about that two-way dialogue with your bank. It's based about having a very clear, open, transparent conversation. But of course, naturally, we go through different credit cycles, clearly, as we've seen, particularly in the pandemic. And as a result, naturally, we've seen an element of price rise. But on the other side, if we think about it from a very practical perspective, we operate now in a negative interest rate environment in Europe. We're may potentially, and this is a personal view, I should say, not a Barclays view at this point, but let's see what happens with sterling over the next a few years. Let's see whether that shapes out. But actually, that will all impact how we fund, clearly, and how we support clearly our corporate organisations going through and helping them really continue to grow. So the next question actually is quite interesting. Is has the last year proved that finance functions don't need to be done from the office, or do you think it's important they all work in the office going forward? Well, maybe it comes to you. I've got my own view on that, but maybe James, do you want to go first?
Yeah, no, happy to. I mean, I think, I mean, to be honest, talking from experience, I've, this year just gone, I've never felt closer to my work colleagues, to be honest. It's, so I think we've certainly proved, Virgin Finance that, that we've been able to work, very adequately from home. But to be fair as well, I also sent a Christmas card to the post room staff in our office who have been very kindly sending me mail out and intercepting things and stuff like that. So, still good old fashioned contacts, still very important just to make sure that happens. But there's no doubt, our working practices have changed. I mean, I've got colleagues who have now not been into the office for a whole year. It's not quite the same for me. I have been in, but that's yeah. So I think we've proved that we can work very resiliently from home, actually, with the network we've got.
And Nicolas, to your point, actually, the last question that's coming on is thinking of client implementations of cash forecasting tools. I guess probably slightly. Do you see your operating model as a business changing, or has it already changed? But also, when you think of it from a cash forecasting perspective, how have you actually thought about the implementation cycle? So, have things changed and how you operate as a business to provide implementation of those tools?
Yeah, absolutely. I think. Of course, we were implementing before the crisis actually with consultants, and most of the time, let's say, part of the project was actually already 75% of the project was happening full online. So only sort of scoping sessions, creative moments, and training being live. That of course changed to fully live, fully online. Scoping, implementation, training. So I think those cycles have been fully online. I think always in the scoping session when the details matter and when sometimes a bit of creativity is required, of course, that is something you need to get around. Yeah, I've always seen that in sort of looking to the broader Cashforce environment, working from home for, I would say 75% of the time is great. But I think when creativity comes in and when sort of interpersonal touches could be added to the discussion, it always helps to improve the final result there. So I do believe there is actually still a value in the human-to-human interaction in the same space.
Yeah, and maybe just to end there, therefore, Hailey, in your perspective, you've talked a lot about how you clearly moved to the work from home model, but how do you see that in a return to work model potentially when that time comes?
Yeah, I mean, I think absolutely we have proved that the finance function can obviously work remotely full time, but I don't think it's going to be like that going forwards, in the sense that it won't be 100% of the time at home. I think, as Nicolas said, we still value some of those sessions that requires slightly more creativity, anything project related, like actually with the Treasury system that we've been doing, some of those sessions, being able to be in a room face to face with a whiteboard and, post-it notes and things like that would have, I think, been a benefit. We've worked around it, of course we have, but they're the types of interactions I think you miss from not being together.
Yeah, and I completely agree with that. Someone's same as James. Interesting. I haven't been in the office since March last year, interestingly, and teams in different countries. I do have to say, you do get to know and have an insight into someone's life actually when you see the backdrop behind them. And clearly, we don't all live in these palaces, James, so which is probably imagine so. But I do agree with you. I think there'll be a nice hybrid probably between where we were before and probably when we go back. I think because I think the important thing is, like you said, the creativity, the personal relationship building, clearly being with our teams is all really important. And there, naturally, I always think as human beings, we enjoy that social interaction and that dialogue that we have. So I think that's particularly important, and it's particularly important, I think, also for our more probably newer, more junior colleagues, probably starting out in their careers, where they want that over, someone to look over the shoulder, just ask a short question. I think that's where it becomes particularly important, I think. But more to come. I think we've seen lots of different organisations take very different approaches and signal different things to the market, but I still think time will tell, I think, as we start to come out of COVID. I'm very conscious because we're just about to run towards the end of the session. We've got about 10 seconds left. So I just want to say a huge thank you to all of the panel. So a tremendous thank you for today. And I look forward once again to seeing you at another ACT event. And have a good day.
Thank you.
Thank you very much. Thank you.
Bye-bye.